Hey guys, this is Danny FX. So today we'll be sharing you analysis on NASDAQ 100. So our time frame of entering this trade is going to be 4 hours, and we'll be waiting for the London/the New York section to overlap before making this trade, which will be 2 p.m. Nigeria time. So this is the NASDAQ, and we're in the 4 hours time frame. So let's swipe this chart, then move down to the weekly time frame to see what the market is doing. Is the market bullish or bearish? Because knowing the market structure is very important in the forex market. So right now we already wiped the chart, so we are going down to the higher time frame to understand what's the market doing. But before that, we need to zoom out to see a clear view of the market. Now at the 4 hours time frame, now we could see that the market was kind of bearish, but looking at it, we are expecting to know the overall trend by looking at the weekly time frame and the daily time frame together. So now we are the weekly time frame. What we need to know is understand what was happening at the weekly time frame, because the market opened on Sunday and the market has been moving Monday, Tuesday, Wednesday, Thursday, and today is Friday, which is the closure of the weekly candle. So we need to understand what is really happening at the weekly time frame. So now looking at the weekly time frame, we could see that the market has already given us the highest high, which is now could now act as our major resistance level. Then during the major resistance level, we could see now, let us assume we are seeing a double top. And when we are seeing a double top, we are expecting a reversal pattern. But before the reversal pattern, we are still expecting the market to go to that level and retest, which is to give us a clear retest on that level. So either Nasdaq is going to break that level, or it's going to it's going to be a change of reversal, which is a downtrend. Because anywhere we find a double top, we should be expecting a rejection or stuff. Now looking at the daily time frame, because all three we are going to be taking today are all under the daily time frame, because at the 4 hours time frame into 24 hours, which is the market's opening around the 12 o'clock or 11, so from there to 10 p.m. in the evening Nigeria time, we'll be expecting to have a 6 candle at the 4 hours time frame. Then at the 1 hour, we're expecting to have a 24 candle. So now let's draw our major resistance level. Look at the major resistance level. See, the market already respected those level a lot of times before the market is now ranging. Now looking at this daily time frame, we could see that this market has given us a bullish. Then now there's a kind of break of structure. If you look at the market, where there's a break of structure giving us a downtrend. But where will this downtrend bounce off from to continue our uptrend? We understand. Now this is where SMC will come from. We're looking at where could we spot an order block or an LVG, because those are levels where markets will always react from. You understand? So let me remove this uh add. So looking at this now, we're going to spot where's an order block from, which is where should we pick our order block. And you know that our order block is for a bullish order block, we are expecting a last bearish candle before an impulsive bullish candle to get a valid order block. Now we could spot a nice order block at this level. We could see that there's a last bearish candle before an impulsive of a bullish candle. And looking at this already, we already know that market has already reacted the LVG, because market has not tapped into the order block yet, but market is respecting the LVG. You understand? So if we draw an LVG, we could see that okay, the market is reacting from there, not yet on the order block. So we're going to refine the order block down to our entry level, which is going to be the time frame. Well, looking at this now is, will this if the market has a volatility or a volume, will this market come to our LVG, or will it just break and continue going up, or should we expect market to sell down to our entry level? You understand? So now looking at this, now we already spot an LVG. Now look, this is an LVG that the market has already reacted into. You see, the market tap into the LVG, and if you draw a Fibonacci retracement at this level, you could also spot that okay, yes, the market is at the 0.5, which is the physiological level. Because normally I take my trade from 0.618 or the 7 levels, because mostly market is really going to do a liquidity strip to the 7, but I prefer putting my entry at the middle of between the 7 and the 6, because even if they're going to be a week, because there are certain times there will not be a week to that 7, but there will be a week that will cross below that 0.618. So at there I'll be able to trigger them. My stop loss is always going to be a little of it. You understand? If you see the Fibonacci retracement now, it's respecting the 0.5, which is the physiological level of the market. So understanding Fibonacci retracement is very essential in the forex marketing, because that's where you'll be expecting a pullback to, or a retracement to, before the market will continue a bullish or a bearish stuff. So now, looking at the LVG now, how what are the decisions are we trying to make? What are the decisions are we trying to make here? Because now we see that the market is kind of ranging at that level, because it already tapped into the resistance level and the market has been ranging. And one thing about ranging market is mostly on Friday, that if you could find a market making a range, then there are two things that's going to happen. Either we are expecting an impulsive movement to the downside, or what, an impulsive movement to the upside. So right now we are having our LVG and the other block. There are two things that are likely going to happen: an impulsive movement that will give us a bearish candle to tap into our other block, or a impulsive movement that give us a break of structure, which is the break the resistance level to the upside. So now we're going to refine our entry to the 4 hours time frame. Now refining our entry to the 4 hours time frame, we are going to look for the nearest, look at the other block, the little candle, which is, we draw it to that as a nice precise, which is nice, showing that okay, the market is not even yet to our level of entry. So this is the other block. So we are going the LVG, we're going to try to refine the LVG to the precise level of entry. Now refining the LVG, we are expecting the market now to tap into the LVG to give us a buying pressure, which is Nasdaq. If Nasdaq is having a high volume, it's going to respect the LVG, just like Bitcoin. But if it's not going to be having a high volume by the New York session, which is, let's say there will be a high volume, let's say 5 p.m. Nigeria African time. So if they're going to be a high volume, we are expecting market to give us what we wish for. You understand? But one thing about forex marketing is we are not always going to be right. Yes, we're not always going to be right. There are certain times market will misbehave, but we don't need to blame the market. If we apply a proper risk management, we either be on the winning side or be on the losing side. So we either make money or we lose money. But losing money with a proper risk management is very essential in the forex industry. So looking at this right now, is at the 4 hours time frame. First of all, is there any level where we could, like, where is there any level there's an order block which is market is respecting? Now looking at this, we find an order block where the market is already respecting, which is we kind of miss the trade. Now looking at this, we are expecting the market now to also go up to test that level, or go or break this order block down. The both order block are valid, just that this one is already mitigated. This one is already tested and moving, and there are kind of a high probability that there might be a news or an event that might make this other block no more valid, which is it should break this other block and tap into the major order block, which is the daily time frame. So looking at this 4 hours order block is being mitigated already. So we are expecting, look at the market has already tapped, which is, it's not even an order block anymore, because market has tapped into it multiple times, which is now acting as a support level to us. So we're expecting a buying pressure from there to the resistance level, or possible break the resistance level. So now we're kind of missed this trade. So if I will feel like entering this trade, I'm not expecting the market to come and tap the level anymore, but I'm expecting market to make a retracement to a 50% of that impulsive movement, which is, if I draw my Fibonacci retracement, because now there's a change of character there. Because if you're looking at it, there was a last break of structure before the impulsive movement to the downside to the support level. Now looking at the support level now, there's another movement that break the structure, giving us a bullish confirmation that the market is going upside. So if I'm drawing the Fibonacci retracement from the lowest low to the highest high, I'm expecting to make a trade at the physiological level, which is the 0.5 or the 0.6 to the 0.7. But I'm not expecting the market to tap into my support level anymore. I'm expecting market to enter into my level of fee retracement. I'm expecting market to get to the fee retracement for me to be able to make a trade. So you guys are getting me. So please guys, if you love the way I'm explaining and you love the analysis, you guys to hit the subscribe button and stay on your notification button and be active to when I drop another analysis. Thank you guys. So now looking at this, I'll draw my box from the 0.5 to the 0.786. I'm not expecting the market to tap to the other block, but I'm expecting the market to tap at 0.618. That's what I'm looking for. I'm looking for the 0.618 or the 0.5. But this trade, I'll be going with the confirmation. But if there's high chance of it tapping into the if the high chance of it going to tap into the support level, I'll be waiting for another confirmation for me to go. But if I could get a hammer candle closing at that 0.618 and a wick to 0.7 stop, then that's a confirmation that I should go in for a buy. Then I'm trying to, like, if I'm taking this trade around 2 o'clock, I'm targeting just a 2 candle at the 4 hours time frame, because now from the market opening to the market closure, there's already a lot of candles which is already being opened. So I'm expecting just two candlestick to be opening at 2 to 10, which is each candlestick should be for 4 hours. Then two candlestick will be an 8 hours. So from 2 to 9:10, I'm expecting those candles to work for me. So for those who are going to be taking this trade at 30-minute time frame, they might have a lot of candle. For those taking it at 1 hour, they might be having at least 8 candles targeting, which is, if you're going to make it in a ratio, it's going to be like 1:6 or 1:7 for a trade. So this is my Euro USD. So I'm expecting market to retrace to my entry before making a decision either to buy after a candle confirmation, because we read the market through the price action and understand where the institute are trying to target through the SMC, where